everybody. Welcome to Be Empowered, the podcast. This is a podcast in which we dive into the realities of healthcare and entrepreneurship. We offer our opinion, unfiltered, unapologetic, and always with a dose of empowerment. We're here to amplify voices, yours and ours, challenge the status quo, and explore what it truly means to thrive. I'm Dr. Santoshi Bilakota.
And I'm Dr. Shala Mokbel.
So let's get into it. Today, we're going to be talking about the difference between W-2 employment versus a 1099 employment in medicine. And the reason we wanted to do this episode is because Shala and I are both independent practitioners. We are 1099 workers. I haven't had a W-2 job in about 2 years, and it's been longer for you, right, Shala?
Right. It's been since fellowship, actually.
I don't think a lot of new grads and currently even practicing physicians know that there is an option to go 1099. I think when people think 1099, they think, traveling, locums. So I don't think they realize that 1099 income can be any additional income you also get addition to your W-2 jobs. And we'll talk about this later as well because there's different models. There are people who only do 1099 work. There's people who do W-2 and 1099 work. And then, of course, the most common is the W-2 only. So there's different ways to do this, but it is important to know that 1099 is, or full-time 1099 is an option, a very viable option actually. And it is something that might give you more career satisfaction as you progress through. So why does this matter? I think we talked about our own personal experiences with being 1099 workers, but if you look at the healthcare statistics, there has been a rise in locum and telehealth roles. Since 2015, the number of physicians who are doing just locums and telehealth has almost doubled. So right now, about 7% of physicians work locum tenens. Um, and why do they do that? We'll touch on a few of the topics, or we'll try to touch on as many topics as we can while we're talking about this. But a big question is the job security of W-2 worth more than having autonomy that 1099 gives you? Because ultimately it comes down to job security, which W-2, I can't even say W-2 will give you job security because I definitely know W-2 physicians who have also been laid off. Um, but historically, I think people think W-2 job security versus 1099 will give you more flexibility and autonomy. So we're really just weighing the pros of one versus the other. Um, and a few of the topics we'll discuss: taxes, income, lifestyle, risk, and long term planning. So I'll start off by asking you, Shala, do you enjoy being a 1099 physician? And if so, why?
Number one priority for me was flexibility and lifestyle. With 1099 work, I do have that. The job security part, I think that maybe W-2 job has more job security, but the key is that if you're not happy with your W-2 job, which is a full-time job, and you don't have any other options, then if you quit that job and you might be unemployed for a few months. So that's the risk. But with 1099 job, especially multiple 1099 jobs that are part-time, you'll have a lot more flexibility and you'll have multiple stream of income. So if you're unhappy with one, you can replace it with something else and you have the income resource from the other ones to compensate. So I think for me that has been working out. The other part is flexibility, autonomy. So with W-2 job, you're really a cog in the wheel, right? You don't have any say in things. You have to be basically whatever they tell you to do, you have to do. You can't really say, oh, that I don't want to do this or I don't want to do that. Especially as physicians, we don't have a union to protect us. There's no you. It's hard to set boundaries. So there is a lot more that you have to do, and you have to work extra hours without pay in a W-2 job. But 1099, that's not the case. You really get paid for what you do, which is nice about it. I think there is some fear into going 1099 because then you have to take care of your own taxes. You have to basically form corporations or LLC, and we'll talk about those. So it's not straightforward. I agree. It's not as straightforward as going into a W-2 job. Day in, day out. You just clock in at 8, clock out at 5, even though you work probably more than that, and you have set PTO, set sick leave. So it's not like that. But I like it better. There are cons to the 1099 as well that we will talk about. For example, you have to set aside money for sick leave. Well, you have to set aside money for PTO time because you're not going to get paid during that time.
Yes, I think you hit all the major points actually, and all the reasons you said. I That's why I like being a 1099 employee as well. I think for me it was easier to start doing 1099 work on the side while I already had a W-2 job, and that way I could see the difference. I could see how much more money I was making just doing 1099 work versus my salary job. And eventually I started moving away, doing more 1099 work, and eventually just left my W-2 job. With that said, when I left, my 1099 income is not where it is now. I started off with maybe one contract. And over the last 2, 3 years, I've been able to build my schedule in a way that is both flexible, gives me autonomy, as you said, and actually pretty stable, to be honest. Like we already discussed, W-2 employment isn't always stable. I think that's just what people are used to seeing as stability. Right now, I work maybe 4 or 5 different contracts, which sounds exhausting, but it's very doable as long as you're organized. And I think if I lose one or two, I have other streams of income, as you mentioned. So definitely, I prefer 1099 as well, but I do think it's easier to start doing 1099 work when you already have a W-2 job if you're looking for some stability before transitioning. So we already touched on this, but differences are kind of, as follows. If you're a W-2 employee, you're an employee. You work for somebody, the hospital group, or the hospital or the group or your practice. You are their employee. They manage your schedule. They're the ones who take care of your taxes, your retirement. They give you health benefits. They cover your malpractice, and you're on a fixed salary for the most part. Occasionally, they'll do shift based pay, but that's about it. No overtime, like Shala said. Um, there's no additional stipends for working like holidays or being on call, things of that nature. Whereas if you're a 1099 independent contractor, you are self employed, you work for yourself. But with that comes other issues. For instance, you're managing your own taxes, no taxes are withheld. So you have to have a good CPA to pay your taxes quarterly if you need to. Um, and you have to handle your own benefits, which I think for some people is a negative because your employer usually handles that. But if you're purchasing your own insurance, or you can't jump on your spouse's insurance, let's say they're W-2, then you're kind of stuck choosing from the plans that are available in the health marketplace, which may or may not be a bad thing. I do that, and I think I've found a plan that works for me well, but it might not be the case for others, especially if you have a family. So I think the key takeaway here is W-2 will offer some structure, and people will take care of certain things for you. Whereas with 1099, you do have freedom, but you have to arrange a lot of things for yourself. Um, what are your thoughts on that, Shella? How are you guys managing benefits and retirement options and things like that?
So my husband is a W-2 employee. We get our benefits through him. And then he also has a 401k set up with a match. So that's great. And then I do quarterly taxes or pay taxes through W-2 that I pay myself from my own company. So that's how we're managing it. And in terms of 401k or retirement plans, so we talk about this. We can set up retirement plans through our corporations or through LLCs, right? There are options to do that. It's good if, for example, like us, we have one spouse that's a W-2. He's getting the 401k, and he's getting health insurance for all of us. And also, he has PTO and sick leave. So, for example, if kids are sick or if something happens that one of us needs to be there, then he's the one who will call sick, because if I do, then it's an income loss for that day. I think it's been working great for us so far.
Yeah, and I think this setup actually works really well if you have a spouse that is W-2. If you have a spouse that's not, who's also an entrepreneur or owns their own business, I think there are still ways to do this. And I still think personally that it's a net win, even if you guys are both independent contractors. So let's talk about taxes because we briefly touched on that. In terms of well, first, let's talk about money flow and income. With W-2, you're going to get a salary, which means you're going to get paid probably the same amount every month. And taxes are already going to be taken out of there. There's sometimes you might have bonuses, but that's usually, I mean, I won't say less common. I think a lot of jobs, depending, will offer bonuses, but that's going to be variable from year to year. It's also going to be dependent on how much you produce. Whereas if you're 1099, you're getting paid per hour, sometimes per shift, and there's more chance to accrue more income. But if you have multiple streams of income, then you don't have that uh, set monthly income that's coming in. So what does that mean? That means you have to keep track of how much money you're getting in. I keep mine in an Excel sheet. Some people use QuickBooks, but you have to be really diligent about tracking in the money that's coming in, as well as keeping track of money that's going out. What do I mean by that? One of the perks of 1099, we'll talk about this more in detail later, is you can deduct things, right? So if you're a W-2 employee, you can't deduct a lot of things. You can deduct a home office, for example. You can, if you go spend money on lunch, you can't deduct that as a W-2 employee, but at 1099, you can. You can deduct office supplies, various things. As long as you can say it's for your job, you can make those deductions. So that's why it's very important to track what's coming in and what's going out. Taxes, because of that reason, are much easier when you're a W-2 because the company takes out your taxes anyway, so the filing becomes very simple. But if you're 1099, you need to have a CPA because I strongly suggest, and I think Shala would agree, that you incorporate yourself as an LLC or as an S corp to avoid paying the 15.3% self-employment tax. S corps and LLCs are pass-through entities. Basically, they'll improve your tax efficiency. What does that mean? That means instead of paying the self-employment tax, you will probably pay half of that. But again, Shala and I are not CPAs, so talk to an accountant within your state to see what makes the most sense for you. But there is a way around paying the self-employment tax, is my point. And again, because you can deduct a lot of things, if you have legitimate deductions, the amount of taxes you pay might actually be negligible when it comes to 1099 income as opposed to W-2. You might actually end up having to pay less in taxes because of all these deductions you can make. So that's always beneficial. The other thing is if you are incorporated as an S corp or an LLC, you can pay yourself a W-2, and you can be your own employee and you pay the taxes only on that W-2 income. So there's different ways of making this happen, but again, it's very important to talk to a CPA from your specific state to see what makes the most sense. Do you guys use CPAs or how are you guys doing this?
We do, yeah. We have a CPA that I meet with him once a year, but if I have any questions, then I contact him. And we also use QuickBooks to keep track of expenses and income, basically bookkeeping. So you need to have a good bookkeeping app or a bookkeeper to keep track of your expenses. You need to keep track of all receipts, but for example, keep documentation of everything. All the receipts, digital or paper receipts, you have to keep, okay? Because those, in case of audit, you need to have those stored somewhere. The biggest benefit is that you can deduct the expenses, and also mileage expenses, the car expenses. If you're using the car for going to work, you can deduct that. But in W-2 job, you cannot. So there is a lot of perks, and a lot of people don't factor in the taxes um, that are much higher with a W-2 job as compared to the 1099 job.
Right. And the self employment tax, I've touched on this briefly. And again, speak with your CPA, but just to give you an idea, because I didn't know this was a thing when I first started doing 1099 work. So 15.3, that number comes for Social Security and Medicare taxes. Usually, when you're W-2 employed, you only pay half of it. So you pay 7.65, and your employer does the other half. But now you're the employee and the employer. So you're kind of stuck doing both. The one way to bypass this, as I mentioned, is if you create an LLC or an S corp and you give yourself a W-2, only the salary on your W-2. But before I get into that, make sure your W-2 is reasonable. Otherwise, you will get audited. Make sure it's a reasonable salary. So you pay yourself a W-2, and your salary from that W-2 will be the only thing subject to the self employment tax. The rest of it are profits, they're dividends, and they're not subject to the self employment tax. So, due to that, I think you actually can have some tax benefit in incorporating yourself. One other thing that I want to add is if you just do 1099 work a little bit on the side, like I think they say if you have less than $50,000 a year doing 1099 work, it might not be worth it to do an LLC or an S corp. And the reason is if you're paying yourself a paycheck, you're also going to have to do monthly payroll taxes, or at least in the state of New York where I am, you do. So that might not be worth it for you anymore. And that's why it's really important to speak with a CPA in your specific state so you don't screw these up. And of course, CPAs cost money as well. Good CPAs do. So there is some money investment, but overall, I found it to be very satisfying. I'm actually probably making more money at this current point with my 1099 work and having more flexibility and time off, which I'm really enjoying.
Yeah, I agree. I mean, definitely enjoying the autonomy and work-life balance more, the flexibility that comes with it. If you compare the two, I would say probably 1099 pays more. If you compare everything, right? The tax benefit, everything.
And let's talk about retirement because we already touched on that a little bit. So, when you're a W-2 employee, you get a 401k. And if you're in an institution, you might get a 403b. I did when I was working an academic job. So, you get those two retirement accounts and a potential match. If your employer is nice, they will match that for you. When you're 1099, obviously, there's no one to match that for you. But because you are the employee and you're the employer, you can make two separate contributions. So, what does that mean? As of 2024, it might be a little higher for 2025. Your employee contribution to your solo 401k can be $23,000, and your employer contribution can be 25% of your net earnings from self-employment. Again, have a CPA calculate this, but in total, you can contribute up to $69,000, which is a lot more than for traditional 401k. For traditional 401k, usually $23,500 if you're under 50 and whatever match your employer gives you. Whereas if you're self employed, you can actually contribute far more than that because you're the employer and the employee. The way I have this set up is I actually have a financial advisor who helps manage my stocks and my portfolio. He does my solo 401k. It's the Fidelity account. They've set it up, but you certainly don't have to do that. You can do it by yourself as well. But he manages that, and every month, out of my payroll, out of my business account, a certain amount gets taken out and goes directly into there, and that's my employee contribution. And at the end of the year, we calculate with my accountant what my employer contribution should be. So that's how we have it organized. It has worked well for me so far.
From my standpoint, I mean, I have set up a 401k, but it's minimal. It's just that my husband is contributing, maximizing his 401k with a match. I like to have the money and invest it myself into different options, although I don't get the tax benefits from that right now. But I like to kind of look into real estate, look into other businesses as a source of income. So I'd like to have that money.
Yeah, and I think that makes sense. I mean, certainly there is a penalty for withdrawing from your 401k early. So if you don't want to do the maximum on the full maximum on your solo 401k and use that money in other investments, I think that makes sense, especially if you're trying to enjoy your money before retirement age. Um,
Right.
one other thing I want to add to this briefly, because I'm dealing with this right now, is if you're a 1099 worker, I don't know if this applies to W 2. Whoever, the audience can check with their accountant, but if you have medical expenses that are more than 7.5% of your adjusted gross income, that can be a deductible as well. So that is something that you can deduct from your total earnings, which is great. That will count towards whatever taxes that you're going to be paying at the end of the year. And I don't think a lot of people realize that. So let's shift to benefits. We already talked about this a little bit. With W-2, you get malpractice, which can be expensive. You disability. Some companies will pay for short term disability. I don't know too many that are doing long term disability, but I think it's an option. You have health insurance, CME, stipends, and PTOs. If you're 1099, you have to do all of this on your own, and it can be really expensive, especially the malpractice insurance of it all.
Some 1099s pay for malpractice and some don't. So you just have to see, which one pays for it. And you can put it in the contract. So you can ask for malpractice reimbursement. Health insurance, most likely, most of them, they don't pay for it. Or PTO or sick leave, they don't pay for that either. But I would say malpractice, definitely negotiate for that.
If you're doing locums, a lot of locum company will do your malpractice. If you are not doing locums, if you're doing any local contract and they want you to have your own malpractice, make sure you're purchasing it with tail. But the cost is variable depending on the type of work that you're doing. I've gotten my insurance through doctors company, and we'll put that in the captions. To be honest, a lot of the malpractice insurance I have is almost just extra in addition to what my other 1099 jobs have provided me, just to give myself a little extra coverage. If you can find contracts where they will cover it for you, I think that's a real win, because the cost and the risk of not having that malpractice insurance can be very real. And so you have to budget for it early on. So I think, some of the pros that we talked about is you can choose when and how to take time off if you're self-employed, but the con is that time off is not going to be paid time off. The other pro is you can deduct CME and licenses and subscriptions as business expenses, along with a wide variety of things. Whereas with W-2 jobs, you cannot do that. Another con of 1099 work is there might be gaps in income as you build passive or diversified streams of income. So there are some pros and some cons when it comes to benefits and things like that. Okay, we're going to pause here for this week, but don't go too far. We'll be back for part two next week, and we'll tune into the rest of the conversation. Thank you.